Okay, look, I think I misled you again because this video says that an expert investor will explain, but I couldn't find any expert real estate investors. So instead, you're stuck with me. So here's the deal. If you're interested in real estate investing, you probably want to know what type of cash flow you're going to generate. Everybody loves cash flow. It's like a buzzword, right? So that's why that's part of probably why you're watching this video and we're in this game, right? We want to get cash flow. Well, there's a difference between like short-term cash flow and long-term cash flow, or cash flow and wealth. And in this video, I'm gonna share with you the kinds of actual cash flow that matter and the kinds of cash flow you can generate, as well as some expert, well, maybe I'll consider them expert insights, even though it's only coming from me, but some insights on how to get more bang for your buck. Now, I am warning you, these 3 little tips are not going to be what you are expecting. This is not going to be a standard video that just talks about the kind of cash flow that everybody talks about. We're going to go through 3 things that might just blow your mind. So if you're ready, let's go. Okay, so we're talking about cash flow. So we probably should start with the traditional definition of cash flow, right? Traditional definition means I buy a property, and based on what I can gain in income from the property, it should be more than my expenses on the property, right? That's cash flow. So if I buy a property, like let's say you buy it with a mortgage, right? This is what a lot of people do. So you buy a property with a mortgage, which is a great idea. And let's say your mortgage payment is, I don't know, $1,400 a month, okay? But you can rent it for $1,800 a month. Well, if your total principal, interest, tax, and insurance payment is $1,400, plus maybe you have a little bit extra on top for maybe property management fees or ongoing repairs or whatever. So let's say your total actual out of pocket, like on a monthly basis, on average is like $1,500 a month, but you can rent it for $1,800 a month. That the difference between what you spend and what you make is traditional definition of cash flow, right? Now, here's what's cool about that cash flow. That cash flow is real spendable cash. You could buy milk and eggs with that money, okay? It's not like net worth, where if you go to the store and you try to pay for milk and eggs with net worth, they're gonna look at you like you're crazy. This is real cold, hard, spendable cash. What's powerful about that and why we like real estate in this kind of cash flow is if you're just investing in some sort of like latent investment, right? Where it's just growing over time, you just gotta give it time. You don't generate actual dollars, right? You don't generate actual cash flow that you can spend. But with real estate, if you can take in more than is going out on a monthly basis, that's spendable cash flow. The difference between expenses and income is yours to spend and yours to utilize. Now, we could do another video on what you ought to be doing with that cash flow, because a lot of people, what they'll do is they'll get cash flow and they'll go buy a new car or they'll buy a new boat or something like that. Not necessarily a bad idea, but you really ought to be considering a much longer term perspective than just, I got more cash flow today and so I'm gonna spend the cash flow. I'm kind of an advocate of get all the real estate you need to generate all the cash flow that you need so you can stop working altogether. But nonetheless, cash flow from a traditional sense is what are you paying and what are you making, right? That's the first definition of cash flow. But there's 2 other definitions of cash flow that I want to share with you today that I think are going to be really, really powerful and hopefully will shift your perspective on how to look at real estate. So now if we were to define cash flow as actual economic benefit to you, right? Above and beyond your expenses, okay? That's what we're going to call it. So I'm not just talking about the spendable cash, although that is a piece of it. I'm talking about what is your actual income and how is that represented in your real estate? And one of the things that I think is often overlooked but shouldn't be is this idea of principal pay down. Now, here's what I mean by this, okay? We have a lot of people that talk about a 401k. Maybe we talk about it on this channel. So why do people like a 401k? People like a 401k because they go, oh, I can get this job and then my employer is gonna like contribute to my 401k. So we love it because we're like, well, it's free money. You hear that all the time, right? It's free money. Why would you think, no, that's free money? It's free. So we go to a job and we get free money from a 401k and we won't do real estate because we want to contribute to a 401k or we don't want to dump our 401k. Well, here's the reality. If you look at this kind of real estate, especially if you go and buy it with a mortgage and with leverage and it's single family rentals where you're renting out the property, the tenant is paying your interest and paying your principal. Just consider that. Your principal payment early on in a loan is still hundreds of dollars a month, and your tenants are paying down hundreds of dollars a month. So you've taken on this quote unquote liability. It's really an asset, right? You've taken on this liability and you have to pay the principal back to the bank, right? Because you put in 20 or 25%, the bank gives you the other 80%. That's the principal of your loan. And then they charge you interest on top of the principal. And that interest is charged based on how much money you took, but you've got to repay the money you took plus the interest. Well, paying that money back that you took, you don't ever have to pay it back. Now, here's what I mean. It's got to go back to the bank, okay? But the tenant pays it for you. If you're renting out the property, the tenant is paying down your principal. Isn't that better than a 401k? Because think about it. You put money into a 401k, your employer contributes to your 401k and you pat yourself on the back and you give your spouse a high five. Well, great. But you're trading time for money. You're trading time for money to get that 401k. With real estate, you bought a piece of real estate and now that real estate continues to give and you don't have to give it any more love. Not really in theory, right? You buy a piece of property you haven't managed for you. It's the right kind of real estate in the right market with the right set of conditions and your tenants are paying down the principal for you. They are contributing hundreds of dollars a month to your financial well-being and all you have to do is give them the right to live in your property. Plus they'll give you additional cash flow just for the, favor of you letting them live there. We do not consider principal pay down in the way that we should, but it is a type of cash flow because if cash flow is going to be what you're making versus what's going out, right? There's spendable cash flow and then there's principal pay down. By doing this kind of real estate, I hope I can articulate this properly. You buy real estate, you put money into the real estate, okay? The bank takes care of the rest. You eventually sell that property, you're going to get all your money back, right? In theory, right? If you wait long enough and you sell that property, you're going to get all your principal back. And then the principal pay down you never had to do because the tenant did it instead. I mean, that is like going and acquiring, that is a ninja way to go and acquire real estate if you do it this way by having somebody else contribute to your financial well-being on a monthly basis. Now, I'm going to share one other number with you. It's kind of a third tip that I want to give you on how to view cash flow and what real estate can represent for you. And by the way, I don't know anybody that views real estate quite like this. Like I'm trying to think of all the podcasts I listen to and all the books that I've read. I don't know anybody else that views real estate and cash flow in the way that I'm about to share it with you, but it's probably the most indicative of what the real estate's actually doing for you, and therefore maybe the coolest number on the planet. And so I'm about to give that to you in just a second, but before I do, I just want to take a moment to say thank you for watching, and I want to say thank you for being here. I've said it before, I'll say it again. We're so pleased that we get to do this together. We're so thankful that we get to connect with you. So many of you reach out and we appreciate that. We hope that you're putting comments on the videos and we hope that you're connecting with us on the website or anywhere else where you can find us because we love to interact with you. I mean, this channel, it's about you. It's created for you. It's created with you in mind so that we can hopefully deliver things that are really impactful and beneficial to you. We want to help you win in real estate. We want to help you make millions of dollars in real estate, but we know that that's going to happen one property at a time over time. And so our job here is to share videos that to show you how you can declare economic independence, how you can replace your income, to show you the tactics and the mindset required in order to really move forward and change your entire financial life. And so we want to be here to help you know what kind of real estate to do, where to invest, how you should be viewing the real estate, how you should be viewing your money. That's why we're doing this video right here. We want you to have everything that you need so that you can actually create real financial potential for you and your loved ones. Okay, that's why we're here. And so because this channel is for you, here's what I want you to do. I want you to like this video. I want you to subscribe to the channel. And I want you to share this video with somebody else in your life who you love. Prove to them that you love them. Instead of giving them a Christmas present this year, just say, here's this video that you need to watch that's going to change your life. See, look, now you're the hero. That's what we want for you. So like, subscribe, share, and now let's get back to this third point and this thing that I'm going to share with you that I don't know of anybody else that looks at real estate this way. Here's what I want you to consider. When you go and do real estate, right, we've talked about it before, real estate generates multiple profit centers, right? You've got appreciation, you've got cash flow, you've got tax benefits, it's an inflation hedge, somebody is paying down your principal. You have all of this stuff that comes from the real estate. But so often, investors are terribly short-sighted when it comes to viewing the overall massive economic benefit that that property has for them. And so we look at it through this lens. We have a number on all of our pro formas that we call average monthly increase. And here's how this works. If you were to buy a property today, and we're just going to assume that you own it for 5 years, right? If we were to calculate the projected appreciation, the projected cash flow, the projected tax benefits, the projected principal paydown, and all of the financial economic goodness that's going to come from owning this property, and we were to say, let's assume that you were to sell it in 5 years. If we were to look at the total gain that you would have on this property, the total economic benefit represented to your life by owning this property for 5 years, if we took that number, which is going to be kind of a big number, right? But if we took that number and then we subtracted out all of your expenses, there's going to be a total amount of profit, right? That's why we love real estate. It's a magical money machine. Money goes in, money comes out. And that difference between what was invested and what was expenses and what actually came to you in terms of economic benefit, if you took that big number and you divided it by the amount of months that you've owned that property, it creates a number that we call average monthly increase. This is probably the best indication of what the cash flow is actually doing, okay? So let me give you an example in terms of real numbers, okay? We're gonna use simple numbers. Let's say you buy a property for $100,000, okay? And let's say that over owning it for 5 years, it appreciates, I don't know, $35,000. And let's say there's $15,000 of principal pay, or let's say $10,000 of principal pay down, appreciated $30,000, and there's another $10,000 of tax benefits or whatever that's come to you. So if you were to sell that property in year 5 and subtract out all of your expenses, you would look at this number of a $50,000 increase. Now, if you were to take that number and you were to divide it by the 60 months that you've owned it, I don't know what that math would be, right? That's probably like, I don't know, math is not my strong suit. That's what I have calculators for. Here, let me check. If we were doing that, because math is fun. I literally picked a major in college so that I didn't have to do math because that's how much I love it. I actually had this number in my head, 833. So what your average monthly increase would be on a property in that scenario, buy for 100, have $50,000 in total economic benefit, own it for 60 months. You take that 50,000, you divide it by 60, and you'd have $833. That is your actual real cash flow. That is your actual financial economic benefit above and beyond the expenses of the property. That's a new way to look at cash flow. That's a new way to look at real estate that should help you determine whether or not any given property is something you ought to invest in. So what do you need to do? If you want to see an example of what average monthly income looks like, I want you to go to the website. Go to DFY-realestate.com or just go to the description below and click the link and it'll take you to our website. On the website, you can see all kinds of property examples with the numbers broken down so you can really look and see what would an average monthly increase be? What would a monthly liquid cash flow be? What would the principal pay down look on any given property so that you can view cash flow through a variety of different perspectives so that you can see what real estate could actually represent for you. Now, here's the cool thing. Investing in single family rentals, it's definitely one of the smartest things you can do to combat inflation, to kind of hedge a recession, to beat the stock market, to save on taxes. And now there's a new way to do it so you don't have to be the one that figures it all out and has to do it on your own. That's what we are here for. Imagine being able to own real estate and gain all the financial benefits from it without having to visit a single property, without having to visit with the tenants, without having to fix leaky toilets, without having to go and do all of the research and write all the contracts and do all the things that you have to do in order to make a successful real estate investment. Imagine being able to do all that and have it done for you. Because done for you real estate, that's what we do. We are here to take the vast majority of the heavy lifting off your shoulders so you can sit back and relax while your money works for you. Plus, our properties are chosen specifically for where they're located, for the kind of ROI that they're going to get, for the kind of average monthly increase that you can generate. So what I want you to do is I want you to click the link in the description below. I want you to go to DFY-realestate.com. I want you to see real properties and real numbers so you can see what it represents for you so that you can change your life one property at a time. We'll see you real soon.